Hey everyone, happy Wednesday. We made it through another week. I hope that your current week is going really, really well. It's so good to be back and in front of everyone. And we've got another great stream tonight. As most of you know that you're watching, you probably kind of get an idea of how the flow is on the stream. Welcome in. My name is Joe. Welcome to my channel. And today we're going to be talking about, a little bit of good news, a little bit of bad news. Good news is we're going to be going over an article that's talking about a few reasons on why home buying could actually be easier in 2025. However, that doesn't apply if you're a first-time home buyer, and it's still going to be difficult. So unfortunately, first-time home buyers, well, they're still going to be screwed in 2025. It's going to be difficult. But the good news is if you already have a current home and you've got some equity and some leverage, well, then actually might get a little bit easier for you heading into 2025. So this time of year is kind of the time of year for predictions, market analysis, and basically a lot of people in industry, real estate, financial markets, things like that are going to try to figure out what's going to happen next year. Obviously, that's something that's not super easy to do, but obviously it's important to kind of try to get ahead and see what the market could do. So we have two articles to go over tonight, but as always, if you guys have any questions, comments, or anything like that, if you're currently, in a real estate transaction and you need advice or have a question, I'm happy to chime in. Or if you have a question about some other related real estate topic, renting, buying, selling, investment properties, land, hit me with them. I love to answer your guys' questions, and it's always fun to hear what you guys are up to and what your questions are. At any time, if you guys have questions, just pop into the comments and I'll get to them as soon as I can. Like I said, two articles tonight, no video, might be a little bit shorter stream, but I appreciate you spending your valuable time with me here tonight. So we can go ahead and get right into the very first article. The first article is actually from, we need this one, is from Business Insider. And they're talking about 3 reasons buying a home could get easier in 2025 unless you're a first-time buyer. Sorry about that. That's just unfortunate if you're a first-time home buyer. Hey, David, how's it going, buddy? Good to see you. Hope you're ready for the holiday season and hope everything's going well with you. So yeah, if you're a first-time home buyer, it's going to continue to be difficult. We've talked about this for the last couple weeks. But like I said, might be some good news. If you already are a property owner, whether that's a primary residence or an income property, you actually might have a slightly easier time if you're looking to either move up, size down, or relocate. If you currently have a piece of real estate to leverage, well, you might be in luck because the market probably is going to soften a little bit into 2025, which for the last 4 years, the market has been cold, hard, locked up, like just frozen, like all of the bad words, unaffordable, all the high interest rates, all of the negative terminology that we use to describe real estate, housing, and the market have all applied from about 2020 till about 2024. But it looks like good news. We have some light at the end of the tunnel. No, we're not going to see prices reduced by 20%. We're not going to see affordability have this huge increase. I'm not here to, give you this false hope, but we are going to see some improvement and we have to start somewhere, right? Chances are we're going to be locked into this type of housing market with lower inventory, higher pricing, and higher higher interest rates for probably the next 3 to 6 years at minimum. But we're starting to turn that corner a little bit. Remember, we had a tough market for 4 years, unless you were a seller, then it was freaking phenomenal. But if you had to sell and then buy, or if you're a first-time home buyer, very, very, very difficult market for 4 years. So at least it's thawing. There's some hope, and it's going to get better. Let's jump in. Let's see what this article is about. And if you guys have your own thoughts or comments or opinions on this article or anything that I say, pop into the comments. I love hearing from you guys. So let's dig in. The red-hot U.S. housing market could cool off slightly in 2025, making it easier to buy a home. Expect stable or declining mortgage rates and more housing inventory, according to Redfin. However, it's still prohibitively difficult for younger home buyers to break into the market, and it's absolutely true. This middle point here, especially expecting stable or declining mortgage rates. This right here, this is huge. We talked about this a little bit on the last stream if you were with me. We've seen mortgage rates do some crazy stuff over the last year and really 2 years. And basically it's looked like this. Right. And it's just like wild, right? We don't know what they're going to do. They go up 0.5%, they go down 0.5%, they go up 1%, they go down 1%. And yes, interest rates will continue to change, but the anticipation for 2025 is that interest rates are actually going to change at a much lower velocity, and they should stay much more stable and in a similar bracket. So we talk about a bracket or a band on interest rates is usually chopped up into quarter points. So if I had an interest rate graph in front of me, you'd see that each bracket would be 0.25%. And what we really want to see is we want to see that interest rate really stay in one of those bands or brackets or go down. But when it goes up and down, up and down, up and down, it creates a lot of uncertainty with consumers. It blows up consumer confidence. And then people go, you know what? Things are too crazy. Mortgage rates are too wild. I don't even want to get on the ride. Like, I'm just not even going to try. And then we have less buyers, less demand. And that's when the market really thaws or gets frozen, excuse me. So hopefully these expected stable or declining mortgage rates will create a little bit more of stability in the market for consumers. And hopefully that will keep buyers in the game. If there's more buyers in the game, chances are some more sellers will come out of the woodwork and the market will kind of start to move again. So that, in addition to the potential for having some more inventory, we'll talk about that a little bit later in the article. Those two things, those are going to help buyers quite a bit. Again, not going to be super helpful for those first-time home buyers, those home buyers that don't have equity or leverage. But for the general real estate market, we're going to see some things open up. At least that's the thought. The American dream of home ownership has become increasingly harder to achieve in the last few years. Home prices are elevated, mortgage rates are high, and housing supply is constrained. I don't think that's news to anyone watching this stream live or that's watched any of my current streams in the last year. That's not to mention the growing threat of climate change, which is driving up housing costs such as insurance, HOA fees, and property taxes in high-risk states. And so, again, on my channel, on these streams, I'm never going to get political. We're not going to go to that stuff. I've talked about Donald Trump the last few streams. I talked about Kamala Harris and Donald Trump when we were going through the election. And simply, it's not to talk about their politics or their policies, but it's to talk about how it relates to the real estate market, home ownership, and home buying. And same goes with climate change. Like, we can talk about climate change. You can talk about how either does exist or doesn't exist. It either is a human issue or it's not a human, whatever. We're not getting into that. You can think whatever you want. But the fact remains that incidences of natural disasters and events relating to floods, hurricanes, fires, winds, hail have simply increased over the last 20 years. Again, you can debate the reasoning all you want amongst yourself. We're not here to do that. But the fact of the matter remains. And when you have more climate events, severe weather storms, major, once in 100-year storms, which, how many times have we heard that over the last 10 years? Oh, this is a once in 100-year storm, but it seems to happen every few years. So what that does is that does increase insurance costs. It increases HOA costs because oftentimes your HOA cost is largely made up of insurance for the association. And then, of course, you have other things going up like property taxes. Property taxes aren't really tied to climate events as much. It's more property values, but all of those things added together really start to affect affordability. And so that's why over the last few years, we've had huge affordability problems, not enough homes, high prices, high rates, high insurance, high HOA, and high taxes because of the prices. It's really been tough out there, which I'm sure all of you know if you're watching my stream about real estate. There's both some good and bad news on the horizon for home buyers, according to housing market experts. The good news, on a whole, it'll be easier to buy a house in 2025. But the bad news for younger home buyers, at least, is that mostly just the case for boomers. It's all boomers' fault. It's always the boomers' fault, right? Homeownership is actually looking as distant as ever for first-time buyers, especially Gen Z and millennials. And again, the reason, and it, there's a little bit to unpack here. Okay, so let's talk about the good. On the whole, it'll be easier to buy a house in 2025. Major reasons for that are that interest rates should stabilize and tick down just a little bit. They're not going to drop monumentally, but they are going to tick down just a little bit. And additionally, on top of that, we are going to have an uptick in inventory, and we've already seen it. We've already seen the uptick. Now, when I say we've already seen the uptick in inventory, again, real estate's, hyper local. I am in the Los Angeles County area. I'm about 30 miles east of downtown LA. And in my area in the suburbs of Los Angeles County, we are seeing a little bit of an increase in inventory. Now, it is mid-December. This is not traditionally the time that people put their home on the market. With that being said, we've had a couple new listings just this month alone. I put a house into escrow 2 days ago for a buyer, and I'm closing on a house for a buyer on December 30th. So there's definitely still some activity, which is good. I feel like actually this December has been a little bit more like January in terms of inventory and sort of the momentum starting to pick up. Now, depending on where you're watching, that might not be the case. So depending on where you are, I don't know what your local market is, right? This is on YouTube. It's going all over the world. But if you would like to comment with your local market, I'd love to know where you are locally and what you're seeing in your market when it comes to inventory, days on market, and price increases or decreases. So pop into the comments. Let me know what you're seeing in your neighborhood, because I'm always interested to see what's going on around the nation and around the world. So pop in the comments and let me know what you think. But those two reasons are going to make it easier to buy a home. Where it's going to get a little bit more difficult for younger home buyers, Gen Z millennials, is that they don't have any real estate to leverage, right? So it's not like home buying is going to be easier for boomers because they're old. That's not the case. Home buying is going to be easier for boomers because they already have real estate that they can exchange. So they can sell their home that they have a ton of equity in, and they can downsize, relocate, heck, maybe even buy a larger house if they need it, or whatever the case may be. So it's not going to be easier for boomers just because they're boomers. It's going to be easier for boomers because, well, a lot of them own property. And that's exactly why it's going to be hard for millennials and youngsters, as you can see here, because they don't have any property or equity to leverage. Now, where my personal opinion takes over here is that most millennials and Gen Z, guess what their parents are? Most of them are boomers, right? And so those boomers do have, like we've talked about, the real estate, the equity, the financing available. And I think, and we've seen this as an increase over the last few years, but I think we're going to continue to see a trend of boomer parents, even potentially boomer grandparents, help out millennials, Gen Z, and even Gen Alpha, Gen A. Now, we're not there yet, but by the time boomer grandparents are, some of our boomers are grandparents, we're already seeing that their grandkids are in their early 20s, late teens. And yes, those children might not be in the home buying thoughts right now, but those grandparents looking into the future could say, hey, you know what? We're going to put $10,000 aside. We're going to put it in an account, a very conservative investment account. And hey, when that kid gets to be 30, in 9, 10, 11, 12 years, hey, they might have 17, 18, 20 grand that they can use to help put towards a down payment. And, we might think, well, 20 grand's not a whole lot, but it's better than starting at zero. And 20 grand, after all, is a 10% down payment for a $200,000 property, which could be a condo, townhome, attached home, something like that. So bottom line, easier for boomers, harder for Gen Z and millennials. I'm really sorry, millennials. I'm right there with you. Luckily, I'm blessed to own a home. I bought a home right before the pandemic, but I sympathize with you guys. A lot of my friends almost all my friends are millennials, and they're going through it too. So it's difficult, but it can be done. You just got to plan, save, and work hard. And if there's millennials out there in chat right now that are watching live, if you guys need any tips about anything, about what you can do to buy a home, let me know. I've got some good basic tips that will help you. David, what do you have for me? Omaha, Nebraska inventory is near 2015 levels. Average days on market up 50%, 26 days on market. That's crazy to think that a 50% days on market increase is only going from 13 to 26. That's wild to think about. 2.5 months of inventory, so still very low. For those out there, when we talk about months of inventory, if you're a buyer, you want to see at least 6 months of inventory. You'll take 5, but you really want to see 6, 7, or 8. When we get anywhere above 5 months of inventory, that means it's slowly becoming a buyer's market. And that means as a buyer, you'll have a little bit more negotiating power. You'll probably have more properties to choose from, and you'll have less competition from other buyers. So that will help. David, thank you for that recap. I appreciate that update on Omaha, Nebraska. That's good. I'm glad that some inventory levels are coming back up. Buyers are getting a reprieve with being able to actually think about a property before having to make an offer. Inventory is still a little bit on the low side. Hey, Cackleberry, what's going on? Here in Idlewild, ooh, must be cold. It's cold down here in the flats. It's 61, and for me, that's freezing. In Idlewild, it's probably like 40 degrees right now. Houses are selling pretty fast up here, but some are lingering for months. Yeah, that seems to be about right. So for those that don't know, Idlewild is a mountain town. That's a mountain community here in Southern California. And you think, oh, mountain community in Southern California? Yes, we have awesome mountains in Southern California. It's one of the beautiful things about Southern California that makes it so unique. We have the sand, we have the surf, we have palm trees. We also have beautiful, huge pine trees that get covered in snow and amazing mountain towns. And they're only about an hour and a half away. So one of the beautiful things, Idlewild is a unique area for California and Southern California. It is a mountain town. So it really is kind of a niche area to live. You have to want to live in the mountains. You have to want to be exposed to some snow and some colder temperatures. So I'm not surprised that houses are still selling fast, but some are lingering. The reason that a lot of those homes are selling fast is because Idlewild does, and same with Mount Baldy and Big Bear and Lake Arrowhead, our Southern California mountain towns. They tend to be a little bit more affordable because they are not everybody's cup of tea. So a lot of times you can find houses and cabins in those areas for much more affordable pricing than you would a single family home in, what we call the flats, just the suburbs of LA or Inland Empire. So Cackleberry, thanks for hanging out. It's good to have you back in the stream. And I hope you are enjoying your week and you have a good week ahead. David, this is completely unacceptable. 19 degrees. I don't even want to think about what 19 degrees. I think the coldest I've ever been in, I was up in Big Bear, which is again our mountain towns. I was up at about 8,000 feet. No, higher than that probably. And I think it got down to the low 20s. And that was one of the things where it's like, I just went outside to get a sense of it and then turned around and went right back inside to the fire. So I'm not doing 19. I am freezing my fern off at 60 degrees here in SoCal. Yeah, I know you probably think I'm a wussy from SoCal, but that's the way it is. That's the way that it is. Okay. But I do really well at 110 degrees. I do great at 110. Yeah, I'm with Michelle. 19 degrees. Yikes. I'm right there with you. All right. So 3 reasons it'll be easier to buy a house in 2025. Again, unless you're a first-time home buyer. First, housing prices are projected to increase slower than in previous years. It's a good thing for home buyers. We're not going to have these incredible increases in prices every year. Redfin economists Daryl Fairweather and Chen Zhao predict the median U.S. home sales price will rise by 4% in 2025. That is much, much, much closer to our average. We normally see anywhere between 3 to 5%. So this is right in that zone. That means that chances are we're not going to continue to see these huge, oh, my house was worth $600,000 last year. This year it's worth $715,000. That's not going to happen. And quite honestly, that's really not healthy for the market. Goldman Sachs has a similar outlook for 2025, predicting the U.S. home price will increase by 4.4%. Goldman Sachs, of course, a big financial firm, big investment institution. They are usually pretty close with their numbers. That's what they do for a living. Their job is to anticipate financial markets, including real estate, for their investments so that their clients get a good growth on their money. So it really behooves them to have accurate predictions when it comes to real estate pricing. That's roughly in line with median wage growth. Good. So affordability shouldn't get any worse. Considering that the U.S. home prices shot up over 40% between March 2020 and January 2024, this sanguine prediction is good news for prospective home buyers. So again, a little bit of light, just barely starting to shine at the end of the tunnel. Cackleberry, what do you got? It's not too cold, about 45 degrees. My husband is in propane, and he noticed that some of the Airbnbs bought during the pandemic and now going back up for sale. Yep, I believe that. 45 degrees, that's very cold. I was gonna say it's freezing, technically not. But your husband being in the propane business is probably pretty good up there. I know that a lot of the houses run on propane up there. It's probably a busy time of year. Those people that maybe forgot to fill up the propane tanks are probably calling in for some emergency fill-ups, especially as it starts to get really cold. But I'm not surprised. A lot of people did the Airbnb thing during the pandemic. A lot of people saw that as a good investment. They were bored. They were watching YouTubers like me talk about how it's great to get into Airbnb and rental properties, although I'm not a huge fan of Airbnbs for an investment standpoint. Sometimes they can make sense, but a lot of people were thinking, hey, I'm just going to buy an Airbnb. I'm going to buy a house and I'm going to rent it out and make a bunch of money. And they're starting to realize that it's much harder than that. It's not as easy as it looks to be a landlord, especially a short-term housing provider like your Airbnb or your VRBO. Okay, let's continue on, marching forward. Another impediment to home ownership has been high mortgage rates. Yeah, preach, don't we all know, which have more than doubled in the last few years. The average 30-year fixed mortgage rate has risen from below 3% in 2021 to around 7%. That is a gargantuan, monumental, huge increase in a very, very short amount of time, especially in the last couple years. Unfortunately, when an Airbnb burned down on Thanksgiving, let me guess, Cackleberry, were they trying to deep fry a turkey? I feel like that's how it happens. Yikes, that's terrible. What an inconvenience for those occupants. Hopefully everybody was safe. Hopefully there were no injuries. And hopefully that homeowner has the right insurance policy in place. Really quick tip. This is off topic, off subject, but for those people watching right now, live or on the replay, if you have an Airbnb, you need to make sure that your homeowner's insurance policy covers your home being a short-term rental. Because I got news for you right now. If your homeowner's insurance thinks that, oh, it's just a second home for you, or it's just a rental property, like an income-producing property, a long-term rental, I think I got news. If something happens at a short-term rental and you don't have a short-term rental policy in place for insurance on that property, they're going to deny that claim. And you're going to be left paying to either rebuild the property or sell it in its as-is condition, which means you're going to take a huge, ginormous loss. So for all my Airbnb people in the chat and watching on the replay, make sure your insurance is up to date, has good coverage amounts, and is specifically for Airbnb and short-term rental. No, there seems to be some confusion in what exactly happened, but people were hurt. Oh gosh, I hate to hear that. Thankfully, the homes around it didn't catch fire, nor did the trees, which, yes, that's a big thing because that one little structure fire could turn into a huge forest fire. And yes, it's cold, but it's still very, very dry here in Southern California. So I'm really glad that it didn't lead to a bigger problem. Hopefully, those people got away with minor injuries. Okay, while a 7% rate is still high historically, it's a sign of improvement from the housing cycle's high of 7.8% in October. And yes, 7% is high historically going back the last 20, 30 years. But keep in mind, for a very, very long time, our average historical interest rate was actually close to 9% region. So in the grand scheme of things and in the long history, 7% is not high, but in most of our lifetimes, going from about 1985, 1990 onwards, 7% is not crazy high at all. And rates could come down further in 2025, according to housing market experts. Redfin predicts mortgage rates to stay the same or decrease next year. Realtor.com forecasts mortgage rates to end 2025 at 6.2%. That would be phenomenal. And yeah, we're seeing, it looks like the Fed, I don't know exactly when the Fed, let's see, next Fed meeting. I thought the Fed was meeting really, really soon, or they just met. I don't know. I'm trying to quickly look. December 18th. They meet on December 18th. So on December 18th, the Fed's going to meet again. It looks like they're going to cut the federal funds rate by another 25 basis points. Now, again, we've gone over this. I'm going to go over this very quickly. I don't want to spend too much time on it. The Fed controls the federal funds rate. That is not the mortgage interest rate. The federal funds rate is the rate at which banks lend money to each other overnight. It's the overnight rate. But oftentimes when that Fed rate goes down, mortgage interest rates tend to follow, but not all the time. But hopefully that will be a good sign that the Fed does cut rates. And then hopefully that will cause mortgage interest rates to also go a little bit lower. I'm telling you, if we can hover between 6.2 and 6.6 for 2025, it's going to make things a lot more palatable to buyers and sellers alike. It's going to be a good thing. And if we ever see 5.99, 5.98, 5.9, anything, buckle up. This is me buckling my seatbelt, buckle up, because it is probably going to get very, very active again. So, but we'll see. That's not forecasted in 2025. Lastly, experts predict that the new housing inventory will hit the market, bringing relief on the supply side. A Republican sweep in Congress is a positive sign for home builders, as the construction industry will benefit from fewer regulations, according to Redfin. And that is one of the things that the Republican administration that we're seeing, not just in the White House, but also in the Congress and the House of Reps, it's looking very likely that the Republicans are going to relax some of those regulations that are put in place, some of those restrictive policies to home building, what we would call red tape or the bureaucracy. Keep in mind, of a single family home, about 23% of the cost goes into permitting, environmental research, just different approvals from the city, just different types of regulations and red tape. If we can lower those regulations and bring that cost down, well, then that cost should be passed on to the consumer and should therefore make the end product more affordable. So that is one thing that we are looking to at least make a little bit of a difference. Is it going to cut the cost of housing by 25%? No, that is probably not going to happen. But could we see prices soften a little bit? Yeah, it's definitely possible. And again, we'll take anything that we can get to start trending in that right direction. In October, before the election, Jeffrey Roach, chief economist of LPL Financial, said that an increase in housing starts or construction of new residential housing units was a signal for more single-family homes hitting the market over the course of the next few quarters. And I do agree that probably will happen. According to Realtor.com, housing starts for new single-family homes could hit 1.1 million in 2025, a 13.8% increase. Hey, we'll take it. We will take whatever we can get. Again, if we're able to get some more inventory onto the market, it should keep prices at a more stable level. They will continue to go up a little bit, but they're not going to make these huge leaps and bounds that would further hurt affordability. All of these factors could improve the housing market going into 2025. Redfin predicts that home sales will increase anywhere between 2% and 9% next year. So again, all of the signs that we're seeing from all of these major real estate outlets, Realtor.com, Redfin, what was it, Goldman Sachs, they did their what they were expecting. A lot of these major financial institutions are all forecasting for home sales, the number of home sales to go up. That's a good thing. Home sales are a big part of our economy. It's a huge part of our GDP. It's actually the biggest part of our GDP, the real estate sector. So it's going to be good for everyone if we can start that turnover and start that churning. As more houses come up for sale, more buyers will come out. As more buyers come out, potentially more sellers will come out. And with interest rates holding stable, that will also help people go, okay, you know what? Now's the time. Let's do it. Interest rates aren't going to change much. This is the way that it is. No houses for young home buyers. I'm sorry, young home buyers. I really am. I really feel for you. Again, young home buyers, they're my colleagues, they're my friends. I'm about to be 35 and in 4 days, I'm about to be 35. And so, a lot of my friends are, 30 to 40 in that bracket. And I really sympathize for the position that they're in. And unfortunately, it's just going to continue to be tough. So it says, but unfortunately, if you're a first-time home buyer, you're probably out of luck. Redfin doesn't expect the increase in home sales to be driven by young or working class buyers. It's looking likely that any new housing inventory that hits the market will go toward older Americans first. Yeah, you dang boomers. It's the boomers. Ugh. I'm always an advocate of not having these generational wars, this generational warfare, boomers versus millennials versus Gen Z. So, it's not boomers' fault. Some might say that it is boomers' fault because they created the system. I don't know if they knew what they were doing. I don't think they set out to create unaffordable real estate. I know that some bitter people out there and some crash bros would disagree with me. They would say that boomers did this by design to oppress the future generations so they could keep their profits high. I don't know if I buy that. I don't know if they're wrong, but I don't know if they're right either. But unfortunately, boomers are going to still be a stronghold in the real estate environment. But again, that's why I think that more millennials, Gen Z, Gen Alpha are going to probably get some help from those millennial parents and grandparents. Not millennial grandparents, boomer grandparents and parents. I don't think that, for the most part, right? Think about your parents that are probably boomers. Do they want you to suffer? Do they want you to not have a home? Do they want you to not be financially secure? No, they probably don't want that. And if they have the ability to help you, they probably will. So hopefully we still continue to see boomers support their millennial children and grandchildren. But who knows? It's interesting. We're always talking like boomer versus millennial and boomer versus Gen Z or millennial versus Gen Z. Gen X, just like they got like let off scot-free. Gen X, I believe, is like 45 to 60 right now, I believe. And they just cruise through, like they flew under the radar. Nobody hates them. Nobody loves them. It's just very interesting. Just an interesting observation. But sorry, millennials. It's a tough road ahead. Instead, affordable homes will be snapped up by older buyers who are priced out of higher price tiers, Fairweather and Zhao wrote in a recent report. Indeed, first-time homebuyers are having unprecedented difficulty in the housing market. It's typically more difficult for first-time buyers to purchase a home because they don't have funds from selling a previous home to use for a down payment and mortgage payments, Redfin said in a June report. But today's housing environment is especially hostile towards young buyers. And that's what we're talking about in the beginning of the stream, where young buyers they don't have the ability to leverage real estate. And I'll tell you something, I bought my first home, bought it by myself. Well, my wife and I bought it, but we didn't have help from, parents or grandparents. We didn't have an inheritance, nothing like that. We saved our money and we were careful with finances and we were able to buy a home. I had been saving since I was about 16. And both my wife and I came from families that thankfully taught us very good fundamental financial principles. And the only reason we were able to buy our second home, our forever home, after prices exploded was because we had the first home. And this is why I tell young home buyers, it's really important to get that idea of the beautiful forever home as your first home. Get that out of your head. Don't watch HGTV. Don't watch these home renovation shows. Your first home is going to be smaller than you want it to be. It's probably going to be older than you want it to be. And it's probably going to be a lot uglier than you want it to be. But that's how you start. That's where you get your start. You start building your equity. You fix up the home over time. And all of a sudden, 5 to 10 years later, you've got something to show for it. And I think a lot of boomers will tell you that's the way that they started. Nobody starts with the forever home first, or at least it's very, very rare. My first home was a complete disaster. Like there were holes in the floor. You could see the crawl space from the bathroom, standing in the bathroom doorway. The showers didn't work. They weren't installed. There was rotted floors. I mean, it was crazy, but that's where we were able to start. So young home buyers out there, you just have to kind of readjust your perspective and make sure that you understand that you're not going to start with the best thing first. That's not how it works, but you will get there eventually. The important thing is you need to get in the door and start building equity sooner rather than later. It's the most important thing. Cackleberry, she's a boomer. Okay, we have a boomer here. We have a boomer. Kids are 47, 47, 36, and 29. That is quite the spread. And wow, 247s, they got to be twins, right? I mean, that would be pretty impressive if they weren't twins. But that's quite the spread, 29 and 47. They all own homes except the 29-year-old. She isn't married yet and isn't interested in buying a home. Yeah, and you know what? If she's a single 29-year-old, she's a millennial. I think she's barely a millennial. Yeah, twins. Okay. I think she's still in the millennial category with me. And yeah, a single millennial is really, really hard. Not being married, it makes it difficult because you don't have the two incomes, right? You're only working with what you can do. And that's a really, really hard thing. And yeah, some people, they're just not interested in buying a home. They're just not. Some people value traveling and experiences more so. Some people think, you know what, I might want to go move to New York. I might want to go move to Seattle. My job might take me there. I'm not ready to settle down. And I think that's a completely viable thing. I will say though that, you just have to be careful because if you get too far behind in the housing thing, unless you make some really good money, a house is really a long-term financial security. It's really a solid investment, as you would probably verify and agree with yourself, right? So I'm not surprised that she's not interested in buying a home. Most 29-year-olds in this climate, in this day and age, they kind of like, it would be cool if they could, but they know that they can't. They're so defeated that they can't do it. Again, the only reason I was able to buy a home at 29 was because I was married. My wife and I had dual incomes. I had saved for a very, very long time. And this was before prices were absolutely insane. So, maybe, she could change. She might change her mind. And hopefully, whatever she does, hopefully she's happy with whatever she ends up doing, whether that's buying or renting. Wages simply haven't kept up with the pace of home price increases over the past 5 years, according to Elijah De La Campa, a Redfin senior economist. The cost of starter homes have increased twice as fast as incomes during that time. Additionally, for Gen Z and millennials, student loans and credit card debt are emerging as roadblocks to home ownership, as it's difficult to qualify for mortgages with a poor credit score and high levels of debt. And this is absolutely true. And student loans are a killer for a lot of millennial and Gen Z home buyers. Same with credit card debt. I have my own thoughts on this. We talked about this last stream. We talked about this. We talked about how we got to get rid of these of high cost education. Now, I'm not saying that we need to do away with college and that college is useless. It's good for nothing. That's not true. I went to college. I'm a college graduate. I enjoyed my time in college, and it did end up giving me opportunities that led me to the career that I'm in today, and that career led me to being able to buy a house at 29 and, working hard and making good money. So for me, college was beneficial, but we got to get rid of student loans. I don't mean abolish student loans. We shouldn't do that, but we need to impart into the future generation, the younger people, Gen Z and Gen Alpha, that, there's nothing wrong with trade school. There's nothing wrong with going to a trade school. There's nothing wrong with learning a skill and not going to college. It's going to help them make more money sooner, stay out of debt, and then therefore be able to buy a house sooner. Credit card, no good reason for this. There's just no good reason to have credit card debt as an 18, 19, or 20-year-old. Now, maybe there is. I say there's no good reason. It's a blanket statement. Maybe you had a medical thing and you don't have support from your parents or family. So maybe there is a good reason that you have credit card debt. But for most 18 to 30-year-olds, that credit card debt is silly, useless, unnecessary, and quite frankly, a waste of money. So again, it just that portion comes from good financial habits And a lot of people don't have good financial habits, unfortunately. And these two things can eat you up. I mean, think about it. If you have a student loan balance of $500 per month and then a credit card balance of $200 per month, that's $700 a month right off the top that you cannot put towards your house. That's $700 right off the top that you're going to qualify for less per month on a mortgage. You got to get rid of that. You got to get rid of that. As a result, the median age of first-time homebuyers is now 38, according to the National Association of Realtors, an all-time high. That's up from 35 in 2023. First-time homebuyers are also an increasingly smaller proportion of the market at just 24% in a 12-month period ending in June 2024. The year prior, that proportion was 32%. So as we know, first-time homebuyers, they're getting older. But we've talked about this before. That seems to be the trend. People are starting families later. People are going to college later. They're getting into their careers later. They're buying homes later. And if we really want to be frank, people are dying later, right? I mean, the life expectancy continues to grow. So I'm not surprised to see that, the average age of the homeowner has gone up. Comparatively, boomers have an advantage in the housing market. Yes, they do. We know this. According to Edward Yardini, president of financial research firm Yardini Research, boomers own roughly half of the nation's net worth and homeowner equity, giving them a leg up in the housing market. Now, to me, that's not boomers owning roughly half the nation's net worth. To me, that's not very startling. Older people, as we age, typically their net worth goes up. They have less debt. They make more money. They have more assets. They have more real estate. Excuse me. So that's not that surprising to hear. They kind of should have the most of the net worth. And then at some point, millennials will age and they'll have half the net worth, and then Gen Z will. So that's not that big of a deal to me. Now, as boomers age and look to downsize their homes or move elsewhere for retirement, they can take advantage of the home equity they've amassed from years of homeownership. That's absolutely true. And hopefully millennials will be in the same position if they buy homes one day. Gen Zers, meanwhile, will keep living with their family or renting until well into their 30s, wrote Fairweather and Zhao. And yeah, unfortunately, I think that's absolutely the case. So, as you guys can see, it's good. Things are going to get a little bit better. But if you're a first-time home buyer, you're a young home buyer, it's still going to be just really, really tough. So if you are a young home buyer, I don't want you to get discouraged. And I'm going to leave you with a couple tips. Number one, I'm going to leave you with a positive story. If you missed the stream last week, we had the last 2 weeks, we've had some success stories in real estate. Number one, I helped a first-time home buyer who he wraps cars, is a vinyl wrapper. So he wraps cars in vinyl. So that's how you get these crazy colors on cars and stuff. So he does this. And he has a fiance, and they both saved money. They worked very hard. They didn't get any down payment assistance. They didn't get any assistance from family or friends. And they were able to save up money, and they were able to buy their first home with a 20% down payment here in the suburbs of Los Angeles. They actually bought a home for $692,000. And they're my age. They're 1 or 2 years younger than me. So it can happen. This is a young first-time home buyer, didn't have help, didn't win the lottery, didn't inherit money, didn't find a bag of gold, on the sidewalk. And he was able to buy a house. So keep your head up, because the media is very negative. There's a lot of doom and gloom on YouTube when it comes to housing, because quite frankly, that's what people watch and click on, but doesn't make it true. So sometimes you just got to block out that noise, focus on yourself. So some tips for young home buyers. Number one, if you do not have a high yield savings account, please get a high yield savings account. It's a regular savings account. You can get them online. It's not going to be through Bank of America, Chase, Wells Fargo, none of those. I have one through M1 Financial. There's also stuff like Robinhood, or there's another one. I think Affinity is another one. I can't remember. But if you just punch in high yield savings accounts in Google, they'll all come up. I really like M1. This isn't a sponsored stream by M1 Financial, but I have them. They've been great. I get 4.5% on my savings account. So I put a bunch of money in there, put most of my money in there, and it just grows at 4%. And you're, at the end of the year, I'm going to make several thousands of dollars in interest. Absolutely free money, right? So number one, get a high yield savings account, keep most of your money in there. Number two, if you're renting right now, and let's say, your rent is $2,500 a month, and you go, you know what? I want to start kind of figuring out the home buying thing. I want to get used to home buying. You go, okay, well, based on the area that I want to buy and the house that I want, I need to be able to afford $3,000 a month. Okay, this is what you do. Your rent's $2,500. You start paying an extra $500 every month. So you pay that difference. So you pay $2,500 to your landlord, and then you take another $500, put it into a separate high yield savings account. Every month you do that. Now you're used to paying, it does two things. You get used to paying $3,000 a month, which is going to be your anticipated mortgage. And on top of that, you're now saving $500 a month. You're squirreling it away specifically for a down payment, specifically for a house. It's a really good tip. It's easy to do. Third, and this is the last one I'll leave you with because I don't want to, overwhelm y'all. But the third thing is work on the credit score. The credit score is huge. And it doesn't just mean whether or not you get approved for a loan or you don't get approved for a loan. However, if you have a good credit score, really above 720, you're going to get a much, much, much better interest rate. If you are above 650, between 650 and 720, you're still going to get a decent interest rate, but it's not going to be as good. And if you're 6 to 650, you're going to get a loan, but it's going to cost you some money. And if you're below that, then they're probably not even going to approve you for a loan. So simply pay off your credit cards. If you've got credit card debt, start with the smallest balance first, work your way up, and just try to get some of that credit card debt paid down. If you don't have credit card debt, use your credit card, but pay it off every month. Pay that statement balance off every month. Your credit score will go up, and it will save you money on your future loan. I guarantee it. Let's see here. What do we got? Cackleberry, my 30-year-old son-in-law is a veteran, so they were able to buy a house with no money down. First and foremost, thank you to your son-in-law for his service to our country. I have huge respect and pride in our armed forces and military. It's one of the things that makes America wonderful, preserving our freedoms. Thank you very much to your son-in-law for serving in whatever branch and whatever capacity he served in. Secondly, the VA loan is a beautiful thing. I wish we could do more for our veterans, in fact, but the fact that they can buy a property with no money down is a wonderful start. The VA loan is a wonderfully powerful tool. Anybody that has access to it should at least be looking at it. It can be a great, great tool, and it's a wonderful thing that we provide to our service members. Thank you to your son-in-law again for his service. Yep, I'm right there with you, David. We appreciate your son-in-law service. Absolutely. Hey, Bryce, what's going on, buddy? How we doing? Thanks for stopping by the stream again today. It's good to see you. A lot of these overpriced new housing are mostly luxury mansion, luxury condos, luxury houseboats, and luxury apartments. We haven't seen affordable real estate since the 1950s. Bryce, you are not wrong, brother. I agree with you. There are so many builders now building luxury, just like you did, luxury fill in the blank mansions, condos, apartments, whatever, homes. And I know why. It's because, again, land is so expensive. The red tape to build a house is so expensive that when a builder says, okay, let's just make it, let's say I've got 1 acre and I can either build, I'm going to split it up and do 1/4 acre lots. And I can do 1/4 acre lots, which I know will fetch more money. And I could do a 2,400 square foot home on a 1/4 acre lot. And I could make it really nice. And I could sell that. I could sell 4 homes for $1 million a piece. And here in my neck of the woods, for a 2,400 square foot home on a 1/4 acre, if it's a new build, $1 million bucks, yeah, that's about right. So they go, I could build 4 homes and I could sell them for $4 million. Or I could build 8 small homes, maybe sell them for $500,000 a piece. And then I could still make my 4 million, but then I have to build 8 homes, and it's going to take more time. It's going to take more money. It's going to be harder to build 8 homes. Plus, with 8 homes comes 8 permits, comes 8 environmental surveys. With 4 big homes, you only have to do 4 permits. So it's going to be more cost effective. And we're seeing a lot of developers say, why would I build a small home and sell it for $500,000 when I could build a slightly larger home and sell it for $900,000? And unfortunately, that's one of the things that we need to do as a government, as a people. We need to mandate and figure out how we can encourage builders to build smaller, more affordable homes. Back in the 1950s, the average house cost $4,000. Crazy. You can pay it off in 1 year working in a factory while the wife stays at home. Now you got to be a doctor to maintain that same lifestyle. Yep, you are exactly 100% correct. It is crazy how quickly things have changed, and it's difficult. It's just hard. So guys, we're seeing some light at the end of the tunnel. If you're a young home buyer, it's still really difficult, but don't lose hope. Don't lose hope. You can buy a home. There's different ways to do it. If you need more information, if you are someone right now, either watching the live or watching the replay, and you want some tips and you need some help, and maybe you need some advice with just even how to get started on buying a home, please drop me a line, connect with me. I'm happy just to give you some guidance. I'm not going to send you a bill. I'm not going to rope you into buying a house. I just like to help people when it comes to real estate. So I'm going to share this tab. This is one of my websites. It's called workwithjoerealtor.com. You can see it right there. I'm also going to put it in the chat. You can go to workwithjoerealtor.com. You can hit any one of these buttons. You can read a little bit about me, and you can hit any one of these buttons, and it will take you to a form that you can fill out and then book a call with me. And I'm happy to help you just with your general real estate questions. Of course, if you are looking to buy or sell anywhere in the United States or really anywhere across the globe, I have a huge network of agents. I've been building a network of agents for a long time. I've been doing this for over a decade. I have great connections in all parts of the United States and all over the world. So if you are looking to buy or sell a home in any of the corners of the United States, and you want a good agent, a competent agent, an agent that actually knows what they're doing, and you don't want to just punch stuff into Google and hope that you get matched with a good agent, go to my website, workwithjoerealtor.com, sign up for a time so that we can chat. And then I will make sure that you're connected with a really good agent that's not going to screw your deal up. And if you are looking to buy or sell in the greater Los Angeles area or Inland Empire, anywhere in Southern California, I can work directly with you. I can guide you personally through the process of helping you buy or sell a home. And again, go to workwithjoerealtor.com, click on any one of these buttons, and it will take you right to me. Guys, this is a slightly shorter stream. You guys have been wonderful. I can't tell you how rewarding it is for me to log on, hit my go live button, and see so many familiar faces pop up. Cackleberry, Bryce, David, all of my regulars. Just thank you so much for hanging out and giving me some of your valuable time. I hope you have a wonderful rest of your week. We are going to be streaming next week, Wednesday, the 18th. We're going to be streaming on the 18th. We will not be streaming on Christmas, the 25th. So just so that you guys know. And I also don't know if we're going to stream on the 1st. That's New Year's Day. I might stream on Thursday, the 2nd. I don't know. We'll see. Awesome. Great. I love it. I look forward to helping you with your move to Prescott when the time is right, Cackleberry. And maybe I'll come out and visit since my brother's out there. So that would be kind of fun. So as always, guys, thank you so much for your valuable time. I really love and appreciate you guys. Thanks for stopping in. Thanks for chatting with me. Have a wonderful rest of your week. We will be back next week. If you guys have any topics you want me to cover, put it into the chat. I want to talk about whatever you guys are interested in. As always, have a beautiful, beautiful week ahead. Thanks so much for your time and have a great week. I'll see you next time. Bye-bye.